Hello everyone, I'm Stephen Gage, founder of Vision Commercial Development. In today's video, we're going to talk about the 4 key methods that are instrumental in making investment decisions. Unlike residential properties, commercial real estate requires a deeper dive into valuation methods, each tailored to suit different types of properties and investment goals. Let's get started. Let's start with the sales comparison approach. Often this is called the comps method. The method is pretty straightforward, and it's where you compare the property that you're interested in to similar ones that have recently been sold in the area. This method is usually useful for valuing vacant or underdeveloped properties, where the income generated is minimal or non-existent. When using the comps method, you compare property based on factors such as square footage, location, construction type, and the year that the property was built. Adjustments are made for the differences between your property and the comparable properties, which can significantly impact the estimated value. For example, if your property is larger or has been recently renovated, it might be valued higher than a similar but older property. The next valuation method is capitalization rate, or cap rate. The cap rate method is a popular approach for evaluating the potential return on investment of commercial properties. Cap rate calculates the property's net income relative to its purchase price, providing an estimate of the annual return that the investor can expect if the property were bought in cash. The formula for calculating the cap rate is the net operating income divided by the purchase price. For example, if a property's NOI is $100,000 per year and it's on the market for $1 million, the cap rate would be 10%. This metric is fantastic for comparing the potential return on investment across different properties, helping investors to quickly gauge which property offers a better return relative to its price. Next up, we have replacement cost method. This one is all about understanding what it would cost to replace a property today. This is a method that values a property based on the cost of replacing it with a similar one, including the costs of land acquisition and construction. This approach is often used alongside sales comps to determine whether it's more feasible to buy an existing property or build a new one. Suppose the land costs $500,000 and construction costs are $5 million for a comparable building. The replacement cost would be $5.5 million. This method is particularly useful when evaluating properties that may require significant renovation, or when deciding between buying an existing property and building a new one. Lastly, let's talk about the gross rent multiplier, or GRM method. This method relates the sale price of a property to its gross rental income, offering a simple gauge of investment performance. It's important to note that this method doesn't take into account operating expenses, only the sales price and the annual gross rents. The GRM is calculated by dividing the sale price by the annual gross rents. If a property sold for $1 million and generates $100,000 in gross rents annually, the GRM would be 10. A lower GRM indicates a potentially more attractive investment opportunity because it shows how long it would take for the property to pay for itself in gross received rents. In conclusion, whether you're using the sales comparison approach, cap rates, replacement costs, or GRM method, understanding these valuation methods is crucial for navigating the commercial real estate market. Each method has its unique strengths and applications, helping you to make informed investment decisions. At Vision Commercial Development, we believe in empowering our investors with the knowledge and tools needed for success. Remember, the value of a property is ultimately determined by what a buyer is willing to pay, and is influenced by market conditions, investor sentiment, and timing. By mastering these valuation techniques, you're better equipped to align your investment strategies with market dynamics and achieve your objectives. If you found this information helpful and want to learn more about commercial real estate investment, don't hesitate to comment below. And if you're interested in commercial real estate investing and don't want to do it alone, our company, Vision Commercial Development, is always on the lookout for new investors who would like to participate in groundbreaking projects. If you want to start working with the team today, head over to visioncommercialdevelopment.com and let's chat about new and fun investment opportunities that we potentially could work on together. Don't forget to like and subscribe for more commercial real estate content. Thanks for watching, and see you next time.